Before the suits of Wall Street whispered his name, before CNBC guests hotly debated his every move, Chamath Palihapitiya was simply another ambitious immigrant chasing the American dream. Born in Sri Lanka and raised in Canada, Chamath's journey to financial notoriety started with humble beginnings and big dreams. His sharp intellect and fierce drive carried him from engineering studies to the upper echelons of Silicon Valley, where he would eventually make his first major mark at Facebook. At Facebook, Chamath wasn't just a bystander. He was instrumental in driving user growth from millions to over 1 billion. As vice president of user growth, he helped shape the viral mechanisms that fueled the social media giant's meteoric rise. But Chamath wasn't content to be a corporate executive. He had other ambitions, bigger, more disruptive ones. By 2011, he left Facebook and started Social Capital, a venture capital firm aimed at fixing capitalism. This wasn't just branding. Chamath spoke frequently and fervently about using capital to solve society's biggest problems. With charisma, contrarian views, and a knack for publicity, he quickly became a regular feature on financial television and Twitter, gaining fans and detractors alike. Yet it wasn't until the rise of SPACs, special purpose acquisition companies, that Chamath's name became synonymous with a new era of financial experimentation. Where others saw risk, Chamath saw opportunity. He launched SPAC after SPAC, promising a democratization of investment and a new path for companies to go public. Some saw a visionary. Others saw a promoter. As markets surged in the post-COVID liquidity boom, Chamath's SPACs caught fire. Virgin Galactic, Clover Health, Opendoor, his name was attached to billions of dollars and some of the market's hottest, most volatile stocks. The media crowned him the SPAC king. But as time would show, every crown bears weight, and every financial experiment has consequences. This is the story of Chamath Palihapitiya, a man who rose from the tech trenches to Wall Street fame, blurring the line between innovation and speculation. Is he a visionary democratizing finance, or a savvy self-promoter riding the waves of hype? Across 10 chapters, we'll explore how he redefined the rules of the game, and whether he changed them for better or worse. When Chamath Palihapitiya founded Social Capital in 2011, he wasn't trying to build just another venture capital firm. He envisioned a new kind of investment engine, one that wouldn't just chase returns, but would pursue long-term impact. The ethos was ambitious: invest in companies that solve real human problems, not just ones that could 10x a portfolio. The VC landscape was crowded with fast-talking dealmakers obsessed with apps, software-as-a-service platforms, and trendy AI startups. Chamath, however, spoke about healthcare access, education reform, climate tech, and mental health. His pitch was moral and intellectual. He wanted to invest in entrepreneurs who were not only building unicorns but rewriting the rules of the system itself. Social Capital was framed as a revolutionary fund with a heart. From the start, Social Capital attracted attention, and not just for its investments. Chamath, who called himself the Warren Buffett of the next generation, didn't shy away from bold claims. He railed against traditional VCs, Wall Street banks, and tech elites. He derided the short-termism he saw in markets and promised to do things differently. Social Capital's early investments were eclectic and mission-driven: Slack, the workplace collaboration platform; Intercom, the messaging startup; Treehouse, an online coding school; and a health sciences company named SciAps. But perhaps what truly separated Chamath was his willingness to break conventions. He began publishing annual letters in the style of Buffett, using them to discuss not just portfolio performance, but philosophical musings on the future of capitalism. Internally, however, Social Capital was under pressure. By 2018, several key partners had left the firm. Reports began to surface of tensions inside the organization, of vision misalignment and managerial frictions. Chamath, ever the solo flyer, seemed to be consolidating control. He restructured the firm, took it in a more data-centric direction, and even exited LP funding in favor of using his own capital. This move made Social Capital less a VC fund and more a personal investment vehicle. Around this time, Chamath began thinking about going bigger. The tech world had limits. Venture capital was constrained by private markets and time horizons. Chamath had tasted power at Facebook and influence in the media. Now he wanted a vehicle that could take those ambitions to the public stage. That vehicle would be the SPAC. SPACs, special purpose acquisition companies, were not new. They had existed for decades, mostly as niche financial tools. But Chamath saw in them something else, a way to bypass the traditional IPO process, take companies public faster, and build public market empires. In 2019, he launched IPOA, the first in a series of SPACs that would soon become his trademark. The first target was audacious: Virgin Galactic, Richard Branson's commercial space venture. To many, space tourism was science fiction. But Chamath bet big. He infused Virgin Galactic with capital, brought it to the NYSE, and instantly made headlines. The deal wasn't just notable for its spectacle, it marked a pivot point. SPACs were now in the mainstream, and Chamath was their most visible champion. He followed with SPAC after SPAC: iPod for Opendoor, a real estate disruptor; Epoch for Clover Health, a Medicare Advantage company, and more. Each time, Chamath appeared on TV, took to Twitter, and positioned himself not just as an investor, but as a spokesman for financial innovation. But as the SPAC mania grew, critics emerged. Was Chamath bringing transparency or hype? Were these companies ready for the public markets, or were they being rushed for investor returns? And why did so many of his SPAC deals seem to spike on announcement, only to tumble later? Social Capital, once pitched as a mission-driven VC fund, was now deeply entangled in a Wall Street feeding frenzy. Still, Chamath leaned into it. He compared himself to Bezos, Musk, and Jobs. He tweeted market predictions and launched a YouTube channel to promote his ideas. To his fans, he was a rare truth-teller. To his skeptics, he was playing a dangerous game. The transformation was complete. Chamath Palihapitiya, once a Facebook growth hacker, had become a Wall Street showman with billions at his disposal. But the question lingered: was this disruption or just another speculative bubble? ChatGPT. By the time the world truly began paying attention to Chamath Palihapitiya's SPAC ventures, the foundation of his empire had already been laid. It wasn't just the Virgin Galactic deal that sparked a frenzy, it was the confidence, swagger, and unapologetic vision behind it. Chamath wasn't playing by Wall Street's old rules. He was writing his own playbook, and SPACs, special purpose acquisition companies, were his favorite chapter. A SPAC is, in essence, a shell company created to raise capital through an IPO with the sole intention of acquiring an existing private company and taking it public. They'd existed for decades, often in the shadows of traditional IPOs, but Chamath's touch turned them into something else, something sexy, disruptive, and revolutionary. Or at least that was the promise. Chamath formed Social Capital Hitasafia in 2017, a joint venture with Ian Osborne. It would be the first of several blank check companies he would launch, each branded with numerical designations: IPOA, IPOB, IPOC, and so on. The message was clear: this was an assembly line for public market innovation. With each SPAC, Chamath positioned himself not just as an investor but as a visionary curating the future of tech, health, fintech, and more. Virgin Galactic, brought public via IPOA, became the template and proof of concept. It was a bet on the future of commercial space travel, and while the underlying business was ambitious and unproven, the narrative was compelling. The valuation might have raised eyebrows, but investors bought the story. In bringing Virgin Galactic public, Chamath did more than execute a deal, he sold a dream. On CNBC and Twitter, in interviews and blog posts, he styled himself as a populist investor bringing opportunity to the masses and bypassing the traditional gatekeepers. Democratizing access to innovation, he would say. The sentiment was timely. In a world of Robinhood traders, meme stocks, and TikTok market gurus, Chamath spoke the new language of finance. The deal was structured with precision. Chamath's SPAC raised $600 million. Richard Branson's company merged into it, and Chamath personally invested another $100 million. He was not just a dealmaker but a co-owner. And after the stock shot up, he sold a portion of his stake for a significant profit, while still pledging allegiance to the mission of democratizing space. Critics began to murmur, but supporters saw it as savvy business. Following Virgin Galactic, Chamath accelerated. iPub merged with OpenDoor, a prop-tech company looking to disrupt the housing market. Epoch took Clover Health public, a Medicare Advantage insurer claiming to leverage data to lower costs. Then came SoFi, the fintech startup aimed at millennial banking. Each deal followed the formula: find a disruptive, venture-backed private company, pitch a bold vision, merge it with a SPAC, take it public, market it with charisma, and repeat. But with speed came scrutiny. Chamath's bets were bold, but some argued they were rushed. OpenDoor and SoFi had traction, but questions about profitability and long-term viability lingered. Clover Health, in particular, drew heavy fire. A scathing Hindenburg research report accused the company of failing to disclose a DOJ investigation and misleading investors. Chamath had served as chairman during the deal and was now forced to defend not only the company but his due diligence process. "I should have done better," he admitted in a blog post. It was rare humility. But it didn't stop the critics from asking, was Chamath building real value, or just a speculative financial engine? To his fans, Chamath was cutting through Wall Street's red tape. To his detractors, he was a glorified salesman with a megaphone. His online presence didn't help. Each SPAC was accompanied by slick videos, bold threads on Twitter, and interviews where he derided traditional finance as broken and outdated. But when analysts looked under the hood, some of the companies merging with Chamath's SPACs had financials that didn't align with their lofty narratives. Losses were mounting. Revenue projections were aspirational. And yet, the stocks often surged, at least in the beginning. Retail investors, fueled by Reddit boards and Robinhood apps, followed Chamath like a prophet. They bought the story. They believed in the long term. They trusted his intellect and track record. But Wall Street remained skeptical. They knew the dance: hype, raise, pop, sell. The incentives were clear. Chamath, like other SPAC sponsors, often received 20% of the post-merger equity in the form of a promote. That meant if the stock went up even modestly, he stood to make a fortune, regardless of whether the underlying business succeeded. Critics argued this created a misalignment of incentives. Sponsors profited even when shareholders eventually lost. But Chamath was unbothered. He insisted his deals were about creating long-term value and expanding access. "I don't need more money," he said on podcasts. "This is about building a better system." Still, the numbers painted a different picture. By mid-2021, many of his SPACs had underperformed. Some had crashed. Retail investors who bought near the top were left holding the bag. The question now wasn't whether Chamath could launch SPACs. It was whether he could shepherd companies that could sustain growth, profit, and long-term market confidence. As 2021 wore on, the SPAC boom began to lose its shine. Regulatory scrutiny increased. The SEC began probing disclosure practices. The market became more discerning. No longer was it enough to pitch a bold idea. Investors wanted earnings, proof, and results. Chamath slowed down. Epoch and other SPACs remained without merger targets. Some expired. Others were wound down. He turned his attention to climate tech, launching Social Capital Soretta Holdings, targeting biotech and sustainability. But the heady days of SPAC mania were over. Still, the impression he left remained indelible. Chamath Palihapitiya had changed the game, even if the game eventually changed him. He had built a SPAC empire not just with capital, but with charisma. And while some of his deals faltered, his impact on how companies go public, and who gets to participate, was undeniable. In the early months of 2021, Chamath Palihapitiya was everywhere. He was lighting up CNBC panels, dropping viral Twitter threads, launching new SPACs by the month, and speaking with the confidence of someone who had decoded the market's future. For a moment, he seemed untouchable, tech's philosopher king, Wall Street's disruptor, and Reddit's favorite investor. But as the year progressed, the glow began to fade. Returns lagged, scrutiny intensified, and critics sharpened their knives. The very system Chamath sought to upend was beginning to push back. The fall of the SPAC darlings. The first real hit came from one of his most controversial deals, Clover Health. The company, taken public through IPOC, had claimed it was reinventing Medicare Advantage through its data-driven Clover Assistant platform. But in February 2021, Hindenburg Research published a blistering short report that alleged serious issues: failure to disclose a Department of Justice investigation, misleading investors about its technology, and an over-reliance on marketing. For Chamath, who had served as chairman during the SPAC merger, this was not just an attack on a company. It was an attack on his due diligence, his credibility, and his entire SPAC framework. Initially, he went silent. Then, under pressure, he posted a lengthy blog defending the deal. He admitted he should have done better, but doubled down on Clover's potential. Still, the damage was done. Clover stock began to slide, and investors started to question whether Chamath's public persona as a visionary was clouding his ability to assess real business fundamentals. It wasn't just Clover. Opendoor struggled to meet expectations in a cooling real estate market. SoFi, despite its flashy marketing and bold claims, faced fierce competition from legacy banks and other fintech startups. Even Virgin Galactic, the flagship of Chamath's SPAC story, stumbled as spaceflights were delayed and commercial viability looked increasingly distant. The market was sobering up. Investors realized that many of these companies weren't profitable. They were bold visions strapped to shaky financials. SPACs as a category began to underperform, and retail investors, many of whom had trusted Chamath, were left holding the bag. Media turns, tone shifts. When Chamath first rose to SPAC fame, the media couldn't get enough of him. He was smart, quotable, and contrarian. He talked about inequality, the failures of traditional capitalism, and how technology could solve structural problems. For journalists hungry for narratives in a chaotic market, he was the perfect anti-hero. But as deals underperformed and questions piled up, the media narrative shifted. Headlines began to question whether Chamath was more marketer than maker, more promoter than investor. Stories ran with titles like, "The SPAC King's Empire is Cracking," or "Chamath's Bold Bets Are Backfiring." His TV appearances became less frequent. The tone of his tweets grew more defensive. He still had his supporters, loyal retail investors who clung to the long-term vision. But he no longer seemed invincible. He began to project something unfamiliar: restraint. Regulatory whiplash. Behind the scenes, the SEC was tightening its grip on the SPAC market. New disclosure rules were being proposed. The freewheeling days of promoting hockey stick revenue projections and grandiose visions without accountability were being reined in. SPAC sponsors now faced tougher scrutiny. What was once seen as a loophole to avoid the traditional IPO process was now a red flag. Investors demanded more transparency. Chamath, who had once floated the idea of launching dozens of SPACs, began to retreat. In fact, by late 2021, he started shutting down some of his SPACs. IPOF and iPod were dissolved, and investors got their money back. It was a quiet admission that the window had closed. The capital markets had changed, and even Chamath couldn't force them open. Silicon Valley versus Wall Street. Chamath had always straddled two worlds: the logic of Silicon Valley and the scrutiny of Wall Street. In tech, big dreams and long runways are part of the culture. In finance, especially public markets, patience wears thin quickly. When he pitched companies like Virgin Galactic or SoFi, he did it with a tech founder's optimism. He believed in storytelling, in vision, and long-term disruption. But public markets demand quarterly results, and patience runs out fast. His SPAC model tried to bring Silicon Valley's approach to the public sphere, but the clash was inevitable. When the vision didn't match the earnings, the backlash came fast. Chamath's response. Chamath didn't disappear, but he shifted. He began speaking more about climate change, deep tech, biotech, and sustainability. He launched the social capital Savreta SPACs, partnering with experts in specific verticals. The message was that he was evolving, maturing even. In interviews, he emphasized that he never viewed SPACs as the endgame. They were tools, he said, not the mission. He hinted at larger ambitions, political, philosophical, structural. But the aura of certainty was gone. He no longer spoke like a prophet. He sounded more like a reformer. Still, his influence lingered. SPACs would never be seen the same way again. Chamath had democratized them, made them mainstream, and shown that Wall Street could be bent, if only temporarily, by charisma and code. He had built a SPAC empire. But empires built on momentum need more than vision, they need results. And now, Chamath was facing the harshest truth of all: the market, eventually, asked for receipts. By 2022, the roaring enthusiasm of the SPAC boom had turned into a sobering reckoning, and Chamath Palihapitiya stood at a critical crossroads. For someone who had once declared that traditional IPOs were broken, and claimed SPACs were the cure for what ailed capitalism, the reversal was stark. His deals had stumbled. His public profile had shrunk. The market, once thrilled by his confidence, was now impatient for accountability. It was no longer enough to be provocative. It was time to prove staying power. Chamath had never been shy with the microphone. Whether on CNBC, Twitter, or his massively popular All In podcast, he knew how to capture attention. He could rattle off macroeconomic trends, critique the Fed, pitch startups, and call out political hypocrisy, all in one breath. But after the SPAC backlash, something changed. He started to pull back. Media appearances became less frequent. His Twitter feed, once filled with high-conviction declarations, grew quieter. Even on the All In podcast, co-hosted with friends and fellow investors Jason Calacanis, David Friedberg, and David Sachs, Chamath's tone shifted. He was still confident, but more measured. The firebrand was cooling. To some, this was the natural arc of a high-profile investor absorbing the consequences of overexposure. To others, it looked like strategic retreat, a calculated pause to wait for the storm to pass and re-emerge with a new pitch. The most noticeable shift in Chamath's public activity was a pivot toward deep tech and climate solutions. Through his investment firm, Social Capital, he began backing startups working on decarbonization, battery technology, sustainable agriculture, and quantum computing. No longer chasing just headline-grabbing valuations, Chamath seemed more interested in complexity and long-term impact. This wasn't entirely new. He had always talked about mission-driven capitalism. But now the stakes were higher. If he could demonstrate success in these sectors, it would mark a genuine evolution. If not, critics would label it just another rebranding exercise. Among the new investments was a focus on synthetic biology, vertical farming, and fusion energy, fields that don't produce viral stock charts but promise world-changing potential over the next 20 years. These weren't companies retail investors would meme into moonshots. They were highly technical, highly speculative, and often misunderstood. But for Chamath, that seemed to be the point. The man once chasing 10x returns through financial engineering was now investing in the long game, technologies that might not pay off this decade, but could shape the next one. As he distanced himself from the SPAC craze, Chamath began talking more openly about redefining capitalism itself. He argued that modern capitalism had become too extractive, too short-termist, too obsessed with quarterly earnings. His message was that innovation must be tied to purpose, and capital must serve society, not just shareholders. This wasn't a new mantra, but now it seemed to be more than branding. In investor letters and podcast monologues, he spoke of building companies that solve structural problems: housing, education, healthcare, climate, and equality of opportunity. He was attempting something difficult, transforming his image from the SPAC king to a kind of modern industrialist. Someone who could allocate capital in ways that actually built things. It was a pivot from hype to legacy. But it raised a question: was the public ready to follow him there? One of Chamath's favorite phrases is, "Be early, be right, and be bold." But in investing, being too early often looks indistinguishable from being wrong, at least for a while. The companies Chamath had taken public through SPACs weren't necessarily doomed. Many were just misunderstood, or mistimed. SoFi, for instance, continued building out its financial platform. Opendoor, despite headwinds, remained committed to revolutionizing real estate. Virgin Galactic was still preparing for a future of space tourism, however delayed. But none of them had delivered the kind of success Chamath had promised when ringing the Nasdaq bell. And in a post-CIRP, zero-interest rate policy, world, patience is not always a luxury the market offers. The same might apply to his new deep tech bets. Will fusion energy startups eventually disrupt global power markets? Will AI-driven education reshape public schools? Possibly. But not in time to boost quarterly returns or fix Chamath's short-term legacy. Still, he seemed to accept that trade-off. And for the first time in years, he appeared comfortable not being in the spotlight. There was once serious speculation that Chamath would run for office. In early 2021, he toyed with the idea of running for governor of California, tweeting, #recall Gavin Newsom, and suggesting a new era of technocratic governance. The response was mixed. Some were intrigued by the idea of a billionaire founder challenging the political status quo. Others mocked it as a publicity stunt. Within weeks, he dropped the idea, claiming his time was better spent in the private sector. But the moment revealed something deeper. Chamath wanted more than money. He wanted influence. He wanted to shape policy, to fix broken systems. Whether through politics or capital allocation, he sought a larger stage. The question was whether his reputation, battered by SPAC failures, would allow that. For now, those ambitions appear shelved. But with Chamath, nothing stays quiet for long. By late 2022, Chamath Palihapitiya had undergone something of a personal rebrand. The swagger remained, but it was tempered. The media machine had quieted, but the ambition had not. The SPAC era, his golden run of public market alchemy, was over. But the next chapter was still being written. Would he become a builder of deep tech empires, leaving behind a legacy of meaningful innovation? Or would his name forever be attached to a speculative bubble that burned hot and faded fast? For now, he seemed content to let the work speak for itself. And maybe that, more than anything, marked his true evolution. While Chamath Palihapitiya's public investing ventures experienced turbulence, one aspect of his influence continued to grow: his role as a media figure and opinion leader. The All In podcast, co-hosted with fellow tech entrepreneurs and investors Jason Calacanis, David Friedberg, and David Sachs, became a powerful platform, not just for market commentary but for shaping conversations on politics, technology, and culture. This platform granted Chamath a new kind of influence that transcended stock prices and deal flows. Through the podcast, Chamath connected with a growing audience hungry for unfiltered insights. Unlike traditional media, the podcast format allowed long, nuanced discussions. Here, Chamath's blend of bold opinions, contrarian views, and personal stories found a home. His commentary on inflation, Federal Reserve policy, tech innovation, social issues, and geopolitical risk resonated with a demographic of investors and entrepreneurs eager for fresh perspectives beyond the mainstream financial press. The podcast also showcased a different side of Chamath, one less transactional and more reflective. He debated with his co-hosts openly, sometimes changing his mind on issues, revealing vulnerability and complexity rarely seen in his more publicized business persona. This authenticity helped build trust among listeners, positioning him not just as an investor, but as a thought leader navigating a fractured cultural and economic landscape. This platform, however, was also a double-edged sword. With influence came scrutiny. Critics argued that Chamath's outsized voice on political and social topics sometimes blurred the lines between investor commentary and ideological advocacy. His critiques of government, capitalism, and woke culture polarized audiences. Some applauded him as a visionary willing to speak uncomfortable truths. Others accused him of oversimplifying complex issues or promoting narratives that fed into social division. Still, the podcast's reach expanded. Chamath and his co-hosts regularly engaged with guests across industries, from venture capitalists and founders to policy experts and activists. This diversity of voices amplified the show's appeal and cemented Chamath's role as a connector and influencer in Silicon Valley and beyond. Meanwhile, Chamath's influence increasingly shifted from capital markets to cultural discourse. As SPACs waned, his voice on the podcast filled a void. Instead of just moving money, he was moving ideas, shaping how a generation thought about money, power, and purpose. This shift was subtle but significant. Where once Chamath wielded power through financial instruments, now he wielded power through narrative. This new dynamic aligned with a broader trend, the rise of investor influencers who combine investing with media presence to shape markets and minds simultaneously. Chamath was among the earliest and most prominent figures to embody this model, leveraging his reputation and platform to amplify impact beyond traditional investment returns. But with great influence comes great responsibility and risk. Chamath's willingness to wade into controversial topics sometimes invited backlash, both from political factions and fellow investors wary of mixing activism and finance. Balancing his roles as investor, activist, media personality, and entrepreneur required finesse and posed new challenges. Despite these tensions, the All In podcast remains a central pillar of Chamath's ongoing relevance. It serves as both a sounding board and a launchpad, for ideas, for ventures, and for cultural influence. Through it, Chamath continues to evolve his public persona, from the SPAC king who rode a wave of financial innovation to a complex figure shaping the intersection of money, media, and meaning. As the financial markets continue to evolve and new challenges emerge, climate crises, technological disruption, geopolitical instability, Chamath's voice will likely remain prominent. Whether he leads the next wave of innovation or simply narrates it, his ability to harness the power of platform and narrative ensures his story is far from over. As Chamath Palihapitiya's journey through the turbulent world of SPACs and media influence unfolded, a larger question emerged: what does the future of finance look like, and what legacy will Chamath leave behind in shaping it? The era of rapid innovation and speculative fervor had exposed vulnerabilities, not just in markets, but in the systems and structures that support them. Chamath found himself at the center of this crossroads, embodying both the promise and pitfalls of disruption. The financial landscape was evolving rapidly. The rise of retail investors armed with smartphones and commission-free trading apps had democratized access to markets, yet also introduced volatility and herd behavior. The SPAC craze itself was emblematic of a broader shift, where traditional gatekeepers lost control and capital flowed into bold, often unproven ideas. Chamath had been one of the most visible pioneers riding this wave, but his experience also highlighted the risks of unchecked hype. Looking ahead, Chamath championed a vision of finance that blends innovation with responsibility. He argued for leveraging technology to improve access to capital and to support companies that address real-world challenges, particularly in climate, health, and education. He spoke of a new capitalism that values stakeholder impact alongside shareholder returns, emphasizing long-term sustainability over short-term gains. In practice, this meant directing capital toward deep tech ventures with transformative potential, even if they required patience and bore higher risks. Chamath's investments reflected this shift, focusing on companies pioneering breakthroughs in energy, biotechnology, and AI. These areas, while less flashy than viral SPAC deals, hold the key to addressing systemic issues like climate change and healthcare inefficiencies. Yet Chamath also recognized the cultural and institutional inertia working against such a transformation. Financial markets remain driven by quarterly earnings, regulatory frameworks lag behind innovation, and investor appetite can be fickle. Navigating this environment demands not only capital but influence, persuasion, and resilience. Here, Chamath's media presence and thought leadership play a critical role. By shaping narratives about the future of finance and capitalism, he seeks to build consensus and attract like-minded partners. The All In podcast and other platforms become arenas where ideas are tested, refined, and amplified. At the same time, questions about Chamath's legacy persist. For supporters, he is a trailblazer who disrupted a closed system, expanded access, and pushed bold bets on the future. For critics, he is a symbol of the dangers of hype-driven finance, where charisma sometimes outpaces substance. Reconciling these views depends largely on what the future holds. If Chamath's deep tech investments yield breakthroughs that reshape industries and benefit society, his reputation will be cemented as a visionary who learned from early missteps. If not, his legacy may be overshadowed by the speculative excesses that marked much of his SPAC era. Ultimately, Chamath's story is emblematic of a broader tension facing today's financial innovators, balancing the impulse to disrupt with the need to deliver real value. It is a test of patience, judgment, and integrity in a world where markets can be both opportunity and trap. As new technologies emerge and global challenges intensify, Chamath Palihapitiya's ongoing role, as investor, media figure, and cultural influencer, positions him uniquely at the crossroads of finance and society. Whether he becomes a builder of enduring institutions or a cautionary tale remains to be seen. But one thing is clear: his impact on the evolution of finance, for better or worse, has already been profound. Chamath Palihapitiya's evolution from Silicon Valley prodigy to Wall Street disruptor to cultural commentator reveals a consistent thread: his restless drive to redefine capitalism. But what exactly does his vision for a better capitalism entail? And can it overcome the entrenched systems and incentives that have long defined global markets? At its core, Chamath's vision is about purpose-driven investing, deploying capital not just for financial gain, but to create positive social impact. He often speaks about the failure of contemporary capitalism to address structural inequalities and environmental degradation, arguing that unchecked profit-seeking has led to hollow economic growth and social fragmentation. For Chamath, the solution lies in recalibrating incentives to reward companies that solve fundamental problems: affordable housing, accessible healthcare, climate change mitigation, and education reform. This means investing in companies with measurable social returns alongside financial ones. He champions the idea that long-term value creation requires integrating environmental, social, and governance (ESG) principles into core business strategies rather than treating them as add-ons. He also pushes for democratizing access to capital markets and innovation. His SPAC efforts, controversial as they were, stemmed from a belief that private investment opportunities should not be confined to elite venture capital firms or institutional investors. By opening public markets to disruptive startups through SPACs, Chamath sought to bring retail investors into the fold, giving them a stake in transformative technologies. Yet he recognizes the pitfalls of this approach. The SPAC bubble exposed how hype can distort markets, how retail investors can be misled, and how short-term speculation can overshadow sustainable growth. Chamath's pivot toward deeper tech and sustainability sectors reflects a hard-earned lesson: true transformation requires patience, rigor, and a willingness to tackle complexity. Chamath's vision also extends beyond finance into policy and governance. He has expressed frustration with political gridlock and regulatory inertia that hinder innovation and exacerbate inequality. Although he briefly flirted with running for California governor, he now focuses on influencing policy indirectly through capital allocation and public discourse. He advocates for systemic reforms, such as reforming corporate governance to better align executive incentives with long-term outcomes, modernizing securities laws to protect investors while fostering innovation, and incentivizing companies to prioritize stakeholder value over short-term profits. However, realizing this vision is no small feat. It challenges the fundamental dynamics of capitalism, requiring cultural shifts within corporations, changes in investor behavior, and political will. Chamath's approach blends entrepreneurial optimism with pragmatic activism, leveraging his dual roles as investor and media figure to advance the conversation. His message resonates especially with a younger generation of entrepreneurs and investors seeking meaning alongside money. They want to back companies that contribute to a sustainable future, reflect diverse values, and challenge old paradigms. Chamath's public platform amplifies this ethos, shaping the cultural zeitgeist around what it means to invest responsibly in the 21st century. Critics remain skeptical, warning that Chamath's grand rhetoric risks being performative if not matched by tangible outcomes. The tension between idealism and real-world markets will test his ability to deliver on promises and maintain credibility. Nonetheless, Chamath Palihapitiya stands as a symbol of capitalism's possibilities and contradictions. His journey underscores the difficult balance between disruption and discipline, vision and verification, hype and humility. As global challenges mount, from climate crises to widening inequality, his evolving vision offers a provocative blueprint for how finance might better serve humanity. Whether that blueprint becomes a roadmap or a footnote will depend on the coming years and the results of his bets on a better capitalism. Chamath Palihapitiya's name evokes strong reactions across the financial and tech worlds. To some, he is a visionary disruptor, a billionaire investor who challenged the old guard, democratized access to capital, and pushed for bold innovation. To others, he is a symbol of the excesses and recklessness of the recent SPAC craze, accused of prioritizing hype over substance and leaving retail investors vulnerable. This clash over his legacy reveals broader tensions in modern finance and society. Critics point to the failures and controversies that have dogged many of Chamath's SPAC deals. Companies like Clover Health face damaging investigations and allegations of mismanagement, leading to significant losses for public investors. The rapid pace of Chamath's SPAC launches fueled concerns about insufficient due diligence and over-reliance on charismatic storytelling. Some industry veterans view his approach as emblematic of a speculative bubble that inflated valuations without delivering sustainable business models. Furthermore, detractors argue that Chamath's outsized media presence and confident pronouncements sometimes overshadowed sober analysis, contributing to market volatility and unrealistic expectations. The promote structure common in SPACs, which awarded sponsors like Chamath a large equity stake regardless of long-term performance, raised questions about conflicts of interest and misaligned incentives. Critics worry that this model enables promoters to profit even as ordinary investors bear the risks. Yet defenders of Chamath emphasize his role as a pioneer willing to take risks and innovate within a rigid system. They argue that he helped open up financial markets to a broader audience, breaking down barriers that favored insiders and gatekeepers. His early advocacy for mission-driven capitalism and investments in climate tech and deep innovation signal a commitment to building lasting value beyond quick profits. Supporters also highlight Chamath's transparency and willingness to admit mistakes, pointing to his public acknowledgement of shortcomings in Clover Health's governance as a rare moment of humility in a high-stakes industry. They contend that his transition toward long-term, impact-focused investing represents a meaningful evolution and offers a template for others seeking to reconcile profit with purpose. The debate over Chamath's legacy also reflects generational and cultural divides. Younger investors and entrepreneurs admire his boldness, media savvy, and willingness to challenge entrenched institutions. Older, more traditional players often view his tactics with skepticism, wary of the hype cycles that have disrupted orderly markets. This polarization is further amplified by Chamath's engagement with politics and social issues, which some see as refreshing honesty and others as divisive posturing. His critiques of the Federal Reserve, capitalism, and cultural trends provoke passionate responses, reinforcing his status as both an influencer and a lightning rod. Ultimately, Chamath Palihapitiya embodies the contradictions of a transformational era in finance, one marked by democratization and disruption, innovation and instability, opportunity and risk. His impact cannot be reduced to simple categories of success or failure. The battle over his legacy is still unfolding, shaped by the performance of his current ventures, the evolution of financial markets, and shifting societal values. Whether history will remember Chamath as a visionary architect of a new financial order or as a charismatic speculator whose bets didn't pay off remains uncertain. What is clear is that his story offers vital lessons about the power of narrative in finance, the dangers of hype, and the enduring challenge of aligning capital with long-term social good. Chamath Palihapitiya is a figure defined by contradictions, a maverick investor, a media personality, an outspoken critic of capitalism's flaws, and a champion of its possibilities. Behind the headlines, the SPAC deals, and the Twitter storms, there's a complex individual grappling with the challenges of innovation, influence, and impact in a rapidly changing world. Born in Sri Lanka and raised in Canada, Chamath's journey is one of relentless ambition and reinvention. From his early days at Facebook, where he helped scale one of the world's most influential platforms, to founding Social Capital with a mission to transform how capital serves society, his career has been marked by bold moves and unapologetic confidence. Yet the very traits that propelled him to fame, his charisma, risk appetite, and willingness to challenge orthodoxy, also exposed him to criticism and setbacks. The SPAC boom, while revolutionary, brought with it controversy and scrutiny. Chamath's public admissions of mistakes reveal a rare self-awareness in an industry often resistant to accountability. More than anything, Chamath's story is about the tension between idealism and pragmatism. He envisions a capitalism that is purposeful and inclusive, where technology solves urgent problems and investors think beyond quarterly earnings. But he operates in a system still dominated by short-term incentives and entrenched interests. His pivot to deep tech and climate solutions suggests a desire to build a lasting legacy beyond the noise of hype and speculation. Yet, the outcomes of these ventures remain uncertain, as the march of technological progress is slow and unpredictable. Chamath's embrace of media, through podcasts and social platforms, has transformed him into a new kind of influencer, blending finance, culture, and politics. This hybrid role amplifies his voice but also complicates his impact, blurring lines between investor, activist, and commentator. At the heart of his journey is a profound question: can one man reshape the rules of capitalism and create a system that rewards both profit and purpose? The answer is still being written. For supporters, Chamath is a pioneer lighting a path toward a more equitable and innovative future. For critics, he is a cautionary figure whose ambitions sometimes outpace results. But perhaps the truest legacy is that Chamath Palihapitiya forces us to confront the complexities and contradictions of modern finance, and to imagine what might come next. In the end, the man behind the myth is less a finished story than an ongoing experiment, one defined by vision, resilience, and the restless pursuit of change.